Okay, let's dive right in today with a company that, well, it really captures this tension between amazing technology and, let's be honest, some serious speculation in investing.
Mm-hmm.
We're looking at IonQ.
Mm-hmm.
And based on the sources you shared with us, up to early June 2025, this company was valued at over, what, $10 billion? dollars?
That's the number, yeah. 10 billion. It's pretty staggering when you put it next to their financials.
Exactly. Because here's what immediately jumps out from that source material. In the previous fiscal year, this same multi-billion dollar company reported a net loss over $330 million.
Wow. Yeah, and that disconnect is absolutely fascinating, isn't it?
It really
It
is.
tells you right away the market isn't valuing IonQ on what it earns today because, well, it doesn't earn profits. Not yet.
Right.
It's valuing it entirely on this huge, but still very uncertain future potential of quantum computing and quantum networking.
Yeah.
It's basically a bet on a revolution.
And that bet is exactly what we're here to unpack in this deep dive. This is custom made for you, our listener, drawing only from that stack of source materials you provided, covering info right up to early June 2025. We're going to try and help you navigate through all those reports, analyses, filings.
Yeah, our goal here is really to pull out those key nuggets of knowledge, those insights from your sources. So, understand IonQ's business, the team running it, their financial picture, how the market sees them, who owns the stock, and importantly, the big risks involved.
Think of it as getting the crucial insights without having to wade through everything yourself.
Exactly, your shortcut.
It's your shortcut to being well-informed on IonQ, straight from the sources you shared. Like and subscribe to the Stock Analytics AI YouTube channel. Euro 4.99 month members, give us a ticker, get a prioritized deep dive analysis earnings, and definitely stick with us through this deep dive because by the end, we'll leave you with a provocative question. It's about this high-stakes tightrope walk IonQ seems to be performing.
Balancing act.
Exactly. Balancing massive investment today against the promise of potentially huge, but, very uncertain profits down the road. So stay tuned for that. And seriously, hit that subscribe button on the Stock Analytics AI YouTube channel for more deep dives like this one. All right, let's dig into the first half of this analysis. Let's start with the business itself. What exactly is IonQ doing? And based on your sources, how do they actually make money?
Okay, so at its heart, IonQ is focused on developing and commercializing quantum computers. Their specific technology is trapped ion,
Right, trapped ions?
and their main business model, especially early on, was quantum as a service, or QaaS,
Yeah.
basically providing remote access to their quantum hardware.
And the sources are pretty clear they've made this accessible, right? Partnering with the big cloud guys.
Precisely. You can get access to IonQ systems through Amazon Braket on AWS, Microsoft Azure Quantum, and Google Cloud Platform, all three.
So users can run algorithms without buying the hardware themselves.
Exactly. Typically, it's a pay-per-use model, much like, using traditional cloud computing resources.
Okay. Beyond just the cloud access, are there other revenue streams mentioned in the sources?
Yes, definitely. The sources talk about direct enterprise partnerships. So they work directly with companies in fields like finance, pharma, supply chain, developing specific applications or maybe exploring solutions.
Those sound like longer-term deals.
Generally, yes. They seem structured as longer-term contracts. And then there's government money. They get significant contracts and funding from U.S. agencies, DoD, NSF, Department of Energy are mentioned, usually for R&D or national security type projects.
Now, this is where the sources flag something really interesting. A big strategic shift that happened pretty recently, right? May 2025, the acquisition of ID Quantique, or IDQ.
Ah, yes, IDQ. That acquisition is, I think, crucial for understanding how IonQ's revenue picture is evolving.
How so?
Well, it immediately adds this whole new and maybe more tangible dimension, selling hardware for quantum networking and security.
Okay, so actual physical products.
Exactly. We're talking things like quantum key distribution systems, QKD, quantum random number generators, QRNGs, and single photon detectors. This moves them beyond just offering computational time.
Right.
They're now selling physical gear that addresses pretty immediate cybersecurity needs, which is a different market altogether.
So they're not just chasing that long-term quantum computation dream, they've bolted on a revenue stream targeting today's security market. Interesting. What about the quantum computers themselves, the core tech they started with?
So their systems use those trapped ions. Current models mentioned include the IonQ Forte, and a key metric they push, which is definitely highlighted in your sources, is algorithmic qubits, or #AQ.
Yeah, hashtag AQ, I saw that. What's the idea there?
Well, IonQ is trying to frame it as a measure of a quantum computer's utility. So how useful it is for running actual algorithms, rather than just focusing on the raw count of physical qubits.
So it tries to factor in things like connectivity, error rates, making it more about effective power. Sources mention systems up to hashtag AQ36.
Right, exactly. It's meant to be a more practical measure. And their roadmap, according to the sources, includes plans for more powerful systems down the line, like hashtag AQ64, which was expected sometime in 2025, and then hashtag AQ256 planned further out.
And the acquisitions add more pieces.
Definitely. IDQ brought in those QKD systems, QRNGs, detectors we mentioned. And then there was another very recent acquisition noted in June 2025, LightSync Technologies.
LightSync, what do they bring?
They add capabilities in photonic interconnects and quantum memory. These are seen as, really key components for building larger fault-tolerant quantum computers eventually.
Okay, so they're really aggressively bolting on capabilities through these acquisitions. Where do the sources place IonQ in the overall market landscape then, especially in terms of, scale?
Well, based on the sources, IonQ positions itself as a leader in the quantum space. Key differentiator they highlight is being the only sort of pure-play quantum company available across all three major cloud platforms.
Right, AWS, Azure, Google.
Yeah. Now, financially, as we saw with the Hook, they are definitely pre-profit. Their fiscal year 2024 revenue was $43.1 million. That showed really strong growth, 95% year over year from 2023.
95% is huge.
It is. But then their Q1 2025 revenue came in at $7.6 million, which was actually flat compared to Q1 of 2024.
That seems a bit lumpy after such strong annual growth.
It can be, yeah. That kind of quarterly lumpiness isn't totally unexpected in the early stages of commercializing big, complex systems or contracts. What's maybe more telling is their guidance.
What do the sources say about guidance?
The sources note their guidance for the full fiscal year 2025 was between $75 million and $95 million. That implies they expect a pretty significant revenue ramp up later in the year, especially since Q2 guidance was noted between $16 and $18 million.
Okay, so they expect things to pick up, but those losses we mentioned at the start, they're substantial.
Oh, they are. A $32.3 million net loss just in Q1 2025. And for the full year 2024, it was a $301.6 million net loss. That's the price tag for aggressive investment in R&D and growth.
Right, so that $10+ billion market cap in early June 25.
It's absolutely not based on those numbers. It's the market placing this enormous bet on their future potential in an industry that, everyone expects to be massive someday.
And that requires a very capital-intensive strategy.
Absolutely. Global expansion, acquisitions like IDQ in Switzerland, Qubintech in the U.S., it all costs money, serious money.
And how are they funding all that spending?
They had a very strong cash position. As of March 31st, 2025, the sources showed $697.1 million in cash equivalents, and investments on their balance sheet.
Okay, almost $700 million. That buys some time.
It provides a significant runway, yeah. Enough to fund those ongoing losses and keep investing heavily in R&D and maybe more acquisitions for, several years at that burn rate. The thinking seems to be you have to spend big now to grab a leadership spot in such a fast-moving field. Early advantage could be everything.
Okay. So if we try to boil down the business just based on these sources, what's the primary value they're trying to deliver?
Well, the big long-term value proposition is enabling breakthroughs, right? Solving problems that are just too hard for even the best classical computers today.
The quantum advantage dream.
Exactly. And their trapped ion tech, with its reported high fidelity and that all-to-all qubit connectivity, combined with being on the major clouds for accessibility that's central to that vision. But then there's that second layer from IDQ.
Ah, the dual value proposition idea again.
Precisely. You've got the long-term promise of quantum computation solving these massive problems versus the much more immediate tangible need for quantum-safe security.
Right, because quantum computers could eventually break current encryption.
Exactly. So IDQ's products, the QKD and QRNGs, they offer immediate revenue opportunities addressing a really pressing market need today, especially with governments starting to mandate moves toward post-quantum cryptography.
So that dual focus could make them more resilient. Provides revenue now while chasing the bigger prize.
That seems to be the strategic rationale, yes. It could provide near-term commercial activity, broaden their customer base, while they keep pushing on the, frankly, much harder and more distant goal of universal quantum computing.
Okay, so quick summary just from your sources. IonQ develops trapped ion quantum computers and quantum networking security gear. Makes money from cloud access, enterprise deals, government funding, and increasingly, hardware sales thanks to acquisitions like IDQ. Makes sense. Let's shift focus now. Let's talk about the people steering the ship. What do the sources tell us about IonQ's management team, their track record?
Okay, management. The leadership team seems to have backgrounds that, on paper, look relevant for this phase. The CEO is Niccolo de Masi.
Right. What's his background?
Sources say experience leading public companies, quite a bit of M&A activity, capital raising, and interestingly, he also has a physics background that includes quantum mechanics.
Okay, a mix of finance and physics.
No.
And Peter Chapman, he was CEO, now executive chair.
Yeah, Peter Chapman, he has a deep tech history, especially software engineering, experience at places like Amazon is mentioned. He was really key to IonQ's founding and the early technical direction.
So that transition from Chapman to de Masi as CEO, what's the take on that from the sources?
Well, it's often read as a strategic move, right? Shifting the company's focus more heavily towards commercial scaling, financial strategy, navigating the public markets, which seems to align more directly with de Masi's stated expertise.
So pairing the deep tech founder with someone focused on scaling and finance seems logical. What about other key executives mentioned?
Yeah, the sources note a few others. CFO Thomas Kramer, mentioned as having IPO and M&A experience. CRO Rima Alameddine, with sales leadership background from places like NVIDIA and Cisco. CLO Stacy Giamalis, guided multiple companies through IPOs. It looks like a team built with a mix of, deep tech, sales scaling, and public company operations experience.
Now, have your sources detailed any specific, major corporate crises and how management handled them?
The sources provided don't really dive into specific past corporate crises for IonQ itself. However, you can infer that the management team has definitely had to navigate the inherent volatility and, frankly, skepticism that surrounds quantum stocks in the public markets.
Sure. It's a tough neighborhood.
Right. And their ability to successfully raise substantial capital, like that $372.6 million they got through their at-the-market facility, and to keep executing on technical milestones and strategic acquisitions, despite all those market swings and changing investor sentiment, well, it suggests a certain level of operational capability, maybe resilience, in handling those external pressures.
How transparent do they seem in their communications, based on the sources?
They seem to follow the standard playbook for a public company: regular SEC filings, financial reports, quarterly conference calls, press releases about milestones, acquisitions, partnerships.
Standard stuff.
Pretty standard stuff. They do actively use that hashtag AQ metric we talked about as part of their communication strategy, trying to frame the performance narrative their way, and they definitely focus heavily on future potential.
Which investors need to weigh carefully.
Absolutely. It requires critical assessment. But they do also outline significant risks in their public filings, as required.
Any major ethical red flags raised in the material you reviewed?
No, the sources provided didn't mention any specific major ethical concerns regarding the company or its leadership. They have standard policies, like an insider trading policy. And interestingly, you could argue their move into quantum-safe security with IDQ is actually a positive step towards responsible innovation.
How so?
Well, by proactively developing and selling solutions to address the potential security risks that their own core technology, quantum computing, might eventually create.
Ah, okay. So based only on these sources, how would you assess their, let's say, honesty, capability, and shareholder orientation?
Okay. Honesty seems standard for a public company based on their filings and stated policies. Capability, well, it's suggested by their success in raising huge amounts of capital, executing multiple strategic acquisitions pretty quickly, and making reported technical progress.
Seems capable in that sense. Shareholder orientation.
That's maybe a bit more nuanced. It's implied by pursuing long-term growth and engaging with investors. But the sources definitely flag areas for investors to watch closely.
Like the insider selling activity we saw discussed.
Exactly. That's a big one. The sources noted pretty substantial selling, particularly from Executive Chair Peter Chapman. We're talking around 2 million shares sold for about $38 million in the 6 months leading up to the June 2025 source date.
Wow, $38 million. That's significant selling from the chair.
It is. And the CRO and CFO also had sales noted. Now, people sell shares for personal reasons, of course.
Yeah.
Diversification, taxes, buying a house.
Sure, happens all the time.
But selling of that scale from top leadership is always something the market watches closely. It can be perceived as a signal about their view of the stock's valuation or future prospects.
Any counter signals mentioned? Buying.
Yes, actually. The sources also noted that a director, William Scannell, was buying shares during a similar period. He purchased about 93,000 shares for roughly $2 million.
Okay, so some selling from execs, but some buying from the board. A mixed picture.
It is mixed. The net insider activity reported leaned towards selling, but that director purchase provides a counterpoint. And the other aspect impacting shareholder orientation is potential dilution. Using that ATM facility, while efficient for raising capital, does issue new shares, which can dilute the value for existing shareholders over time. That's always a factor with growth companies needing cash.
Okay, let's talk about the money itself then. Moving to Chapter 3, financial health. What do the key metrics from your sources tell us?
Well, as we've hammered home, the market cap is the standout number, around $10.71 billion in early June 2025. That's the market betting big on the future.
Right. Which means the price to earnings, the PE ratio, is basically meaningless here since they're losing money.
Exactly. NA or zero. They have consistent net losses. We saw a $32.3 million loss in Q1 25, $331.6 million loss for the full year 24. Profitability is not part of the current picture.
But the sources did highlight strong revenue growth, at least on an annual basis.
Yes. Annually, the growth looked impressive. 95% year over year in FY24 versus FY23. And 98% the year before that. Huge percentage growth off a small base.
But Q1 25 was flat year over year.
Correct. That $7.6 million revenue in Q1 25 didn't grow from Q1 24. Again, illustrating that potential lumpiness of early commercial revenues or maybe large contract timings. But remember that FY25 guidance range of $75 to $95 million that signals management expects a significant acceleration later in the year.
Okay. What about profit margins? Are they just pouring everything into R&D and sales?
Pretty much. Operating and net margins are deeply, deeply negative because of those massive investments in R&D and also sales, general, and administrative expenses building the company. But there was an interesting detail in the sources about gross margin.
Oh, what was that?
Sources noted a gross margin of around 52% in FY 2024 if you exclude depreciation and amortization.
52% gross margin. That seems actually pretty good for a company losing so much overall.
It is notable, isn't it? It suggests that the sort of unit economics of their core CAIS and maybe initial hardware sales, before you pile on all the massive spending on future tech and building the corporate infrastructure, well, it suggests those core operations have a decent margin profile.
So the challenge is just scaling revenue massively to cover those huge operating costs.
That's the hurdle. That 52% gross margin hints at potential operating leverage if they can scale revenue effectively down the road. But the current reality is deep unprofitability.
Got it. And debt. Sources indicated that's not a major worry.
Correct. They seem primarily equity funded. So the debt-to-equity ratio is likely very low. Debt management isn't the main financial story here.
Free cash flow, then. That's got to be negative, given the losses.
Oh, yeah. Significantly negative. The sources indicated around $120 million negative free cash flow on a trailing 12-month basis around that time. That lines up with a cash burn rate of roughly $30 million per quarter, consistent with their Q1 2025 results.
So they're using about $30 million in cash each quarter beyond what they bring in.
Roughly, yes. That's the cash outflow needed to fund operations and investments.
And price-to-book ratio, probably high.
I know, certainly very high. Typical for a tech company where the market values intangible assets like IP, future potential, way more than the current physical assets on the balance sheet.
Okay, so let's hit the key question for this chapter, based only on the sources. Is IonQ profitable with a strong balance sheet?
The answer is definitely split. Profitable. Unequivocally, no. They report consistent and, on an annual basis, increasing net losses since going public. That trend reflects a company deep in investment mode, spending heavily to grow.
But the balance sheet part?
But they do have a strong balance sheet.
Yeah.
That's the other side of the coin. They had that substantial cash equivalents, and investments totaling $697.1 million as of March 31st, 2025.
The fortress balance sheet, as management called it.
Right, and that fortress is critical. It gives them the necessary runway, the breathing room, to fund that significant cash burn for potentially several years. But you have to watch that burn rate. Could it increase? And securing future funding, like that $372.6 million raised either ATM facility while necessary, does carry that potential for diluting existing shareholders. It's a constant balancing act.
Okay, shifting gears now into the second half of this deep dive. Let's talk about market perception. How is the market viewing an IonQ? What's the sentiment around the stock, according to your sources?
Well, the sentiment seems quite polarized, which probably isn't surprising, given the nature of the company.
Makes sense. High hopes, high risks.
Exactly. On one hand, it's perceived by many, including some analysts, as a clear leader in a field with just immense potentially world-changing long-term potential. And that perception is what drives that high valuation and has led to some really significant stock price gains at times, like that reported 402% year-over-year gain cited in your sources as of early June 2025.
Wow, 400%. But that kind of speculative excitement usually comes with a lot of volatility, doesn't it?
Oh, absolutely. The high valuation compared to current financials, the ongoing losses, the big cash burn, the fundamental uncertainty of the whole quantum industry, it makes IonQ what you'd call a high beta stock.
Meaning it moves around a lot.
Very sensitive to news, yeah. Both good news and bad news can cause big swings.
So what do the professional analysts make of all this? What do their price targets look like in the sources?
Okay, looking at a sample of analyst ratings from around early June 2025 in your source material, the overall consensus was generally bullish. You saw ratings like 67% strong buy, 33% hold within that specific sample, and the average target price was around $38.33 at that point in time.
Okay, so mostly positive from that sample, but I feel a but coming.
But, and this is where it gets really telling, you have to look at the range of those individual price targets from early 2025. They stand from a low of just $15.05 all the way up to $56.70.
Whoa, $15 to nearly $57. That is a massive spread. What does that tell you as an investor?
It screams uncertainty. It tells you that even the professionals, the analysts covering this stock, have vastly different ideas about how to actually value this company and what its future prospects really look like.
Yep.
It just underscores how incredibly difficult and subjective it is to put a number on a pre-profit company in a brand new, still very fuzzy market. Different analysts are clearly making fundamentally different assumptions about, well, everything. The odds of tech success, the timing of that success, how fast the market will adopt quantum, when or even if IonQ will hit sustainable profits.
So that wide range, you saw it from firms like D.A. Davidson, Benchmark, Needham, Goldman Sachs. It's a huge warning sign that any single price target is basically just a highly speculative guess.
Exactly. It reflects the inherent uncertainty more than anything else.
What kind of recent news was influencing this market sentiment leading up to early June 2025? What was moving the needle?
The sources indicate mostly positive news flow, generally centered around IonQ executing on its stated strategy and building for the future.
Like the acquisitions.
Yeah, the acquisitions of IDQ and LightSync were generally viewed positively by the market, seen as strengthening their tech stack, especially in quantum networking and components for future systems. Their Q1 2025 earnings actually beat analyst expectations. The loss wasn't quite as bad as feared, and revenue hit the midpoint of guidance.
So better than feared results.
Right. And partnerships, like one mentioned with Einride for logistics applications, show these little glimmers of potential commercial traction, even at small scale. Plus, they report technical milestones, progress in quantum error correction research, getting selected for a DARPA program. These things signal progress.
And this positive news tended to boost the stock.
Often, yes. The sources noted an example like an 8% plus surge on June 5, 2025, seemingly tied to positive sentiment around execution. So the market seems to react positively to signs they're hitting their milestones and building capabilities, rather than waiting for, massive current revenue or profit.
Makes sense for this kind of stock. Now, what about the other side, people betting against the stock? Is there much short interest mentioned?
While the sources don't consistently provide specific short interest figures across the whole period, the company's profile just screams short target to some investors.
Why is that?
Well, you've got the super high valuation, relative to fundamentals, consistent losses, negative free cash flow, the highly speculative nature of the entire industry. It's almost tailor-made for skeptics. So it's highly likely there's considerable short interest.
And those short sellers are betting the stock price will fall.
Exactly. They see the financial metrics, the long road ahead, the risks, and they bet that the current valuation is unsustainable. And having a lot of short interest can, itself, add to the volatility. You can get short squeezes on good news, where shorts have to buy back shares quickly, pushing the price up rapidly. Or, on bad news, the selling pressure from shorts can accelerate declines. Just adds another layer of unpredictability.
Okay. Let's move on to who actually owns the company. Chapter 5. Ownership structure. Who are the major players holding IonQ stock, based on your sources?
Okay, ownership. There's a significant level of institutional ownership reported. The sources indicate it's around 43.5%. That excludes certain types of filing spread across, get this, over 600 different institutions.
Wow, 600 institutions, so broad interest. Who are the big names?
Yeah, major holders include the really big players you'd expect: Vanguard, BlackRock, but also large hedge funds and active managers like D. Shaw, Morgan Stanley.
Were there any notable shifts in who holds the stock recently, according to the sources?
Yes, actually quite interesting shifts. In Q1 of 2025, the data showed more institutions were initiating new positions or adding to existing ones compared to those who were reducing or selling out completely.
Okay, so net buying from institutions in Q1.
Right. But what's maybe more intriguing is looking a bit further back. The sources noted the exit of some large early corporate investors. Amazon and SoftBank were mentioned as selling off stakes in late 2024.
Strategic partners heading for the exits.
Potentially. But contrast that with significant increases in holdings by big hedge funds and active managers like D.E. Shaw and Renaissance Technologies in Q1 2025.
So corporations out, hedge funds in. That feels like a changing of the guard among the big shareholders.
It kind of does, yeah.
Yeah.
It might suggest that some of those early strategic or venture-style backers are cashing out, while more financially driven institutions, maybe hedge funds looking for specific catalysts or playing a different time horizon, are stepping in. The shareholder base seems to be evolving.
Interesting dynamic. What about the insiders? The people closest to the company, executives, board members? What's the picture there for holdings and transactions?
This is definitely a mixed picture, and it's something the sources really highlight for investors to pay attention to. There's been quite substantial selling activity reported from key executives.
We touched on Peter Chapman earlier.
Right. Executive Chair Peter Chapman's selling was particularly notable. Around 2 million shares sold for roughly $38 million. In the 6 months prior to the June 2025 source data. That's significant. Sales by the CRO and CFO were also mentioned in the sources.
And selling from top leadership, especially that much, is often viewed cautiously by the market, right?
It certainly is. It's watched very closely. Again, personal reasons always exist, but the scale here is what gets attention. It can be interpreted as a signal, rightly or wrongly.
But wasn't there a counterpoint? Some buying.
Yes, exactly. The sources also point out that Director William Scannell was actively buying shares during a similar time frame. He purchased about 93,000 shares for around $2 million.
Okay, so significant selling from the chair and some execs, but also multi-million-dollar buying from another director. Definitely a mixed signal.
Very mixed. The overall net insider activity reported over that period leans towards selling, but that Scannell purchase is a clear countersignal from within the board. And the sources do mention IonQ has an insider trading policy in place, which is standard procedure for public companies.
Is ownership highly concentrated among just a few players, or is it fairly dispersed?
Well, institutional ownership is significant and somewhat concentrated among those large firms we mentioned. However, based on the sources, no single insider appears to hold a controlling stake in the company.
Got it. And lastly, on ownership, corporate governance. What do the sources mention about how the company is structured and run from a governance perspective?
Seems pretty standard for a public company. They have a board of directors overseeing management. The sources highlight the relevant expertise of some board members, which could be seen as an asset.
Like who?
For example, Robert Cardillo, the former director of the National Geospatial Intelligence Agency. Having someone with that kind of intelligence and national security background on the board seems quite relevant, given the strategic importance and government interest in quantum technology.
Yeah, that makes sense.
And of course, they adhere to SEC filing requirements and have policies like the insider trading policy we discussed. Standard signs of a governance framework being in place.
All right, let's try and tie all these threads together now by looking explicitly at the risks and opportunities. Chapter 6, Risk Assessment. Let's do a quick SWOT analysis based purely on the source material. What are IonQ's key strengths?
Okay, strengths pulled from the sources. First, their core proprietary trapped ion technology. It's noted for high fidelity, that all-to-all connectivity, and potentially operating at higher temperatures than some rivals, which could be an advantage. Second, a strong IP portfolio, over 900 patents mentioned.
Okay, tech and IP, what else?
Their full-stack approach and accessibility being on all three major cloud platforms is a key differentiator. Their rapidly expanding expertise in quantum networking and security, thanks to those acquisitions like IDQ, Quebitech, LightSync, and experienced management team, as we discussed, and strategic partnerships they formed.
Got it. Now the weaknesses, the internal limitations identified in the sources.
Weaknesses are pretty clear, too. Number one, current unprofitability and that significant cash burn. Second, they're still in the nascent stages of commercialization, leading to that lumpy revenue we saw. Third, a fundamental dependence on continued future technological breakthroughs to actually deliver on the promised performance gains.
So execution risk on the tech itself.
Huge execution risk. Also, the complexity and potential challenges of actually integrating multiple significant acquisitions quickly and effectively. And finally, the inherent scalability challenges that might exist specifically with trapped ion technology as they try to build much larger systems.
Okay, opportunities. What's the potential upside, according to the sources?
The opportunities are framed as massive, a huge total addressable market, or TAM, across countless industries that could eventually be disrupted or transformed by quantum computing. More immediately, that growing demand for quantum-safe security solutions, which positions the IDQ acquisition very well.
Right, the security angle again.
Yeah. Longer term, the potential development of a quantum internet is another huge opportunity space. There's also this increasing quantum-ready imperative, mentioned businesses and governments feeling they need to start exploring quantum now, which drives early engagement. And, of course, opportunities for further strategic partnerships and continued government funding.
Makes sense. And finally, the threats, the external challenges IonQ faces.
Threats are numerous and significant. Intense competition is a big one. Not just from other quantum startups, but from tech giants like IBM and Google pouring resources into quantum. And there are many different competing technologies, superconducting circuits, photonics, neutral atoms. Others, it's not clear yet which approach will win out.
So platform risk.
Exactly. Plus, the risk of rapid technological obsolescence is incredibly high in this field. What looks leading edge today could be surpassed quickly. The uncertain timeline to achieving true quantum advantage, where quantum machines definitively beat classical ones on valuable problems, is a major threat. Delays impact sentiment, funding, adoption.
Other threats.
Talent scarcity is a global challenge, finding people with the right skills. And of course, broader macroeconomic factors always loom, things that impact the funding environment or corporate willingness to spend on speculative, long-term R&D projects. And on top of all that, the sources specifically highlighted a pretty significant external risk that really came into focus in 2025, the potential negative effects of U.S.-imposed tariffs on semiconductors and related components.
Ah, tariffs. Right. How could tariffs specifically impact a quantum computing company like IonQ, based on the analyses described in your sources?
Well, the sources laid out several potential negative impacts.
Yeah.
First, and most obviously, increased costs for critical components.
Because parts come from overseas?
Exactly. Quantum computers rely on highly specialized stuff, advanced semiconductors, complex optics, specific materials. Many of these are likely sourced internationally. Tariffs act like a direct tax on importing these parts, potentially increasing IonQ's cost of goods sold or their R&D expenses.
And higher costs could slow things down, presumably.
Potentially, yes. The sources suggest that increased component costs, and maybe even supply chain disruptions caused by tariffs, could impede the speed of their R&D cycles and potentially slow down the deployment of new quantum systems.
How about competitiveness?
That's another point raised. It could reduce the global competitiveness of U.S.-based quantum companies like IonQ. If their systems become more expensive due to tariffs compared to international rivals, that's a disadvantage. It could also impact the build-out of the supporting data center infrastructure needed for cloud access if that equipment gets more expensive too.
Could it rattle the stock price itself?
The sources noted that tariffs introduce uncertainty and were cited as a potential factor contributing to stock volatility and pullbacks around that time. They represent a clear potential negative pressure on financials and operations. And finally, tariffs could disrupt the global collaboration and supply chains in a field that really thrives on international research partnerships.
So it's presented in the sources as just another layer of risk.
Exactly. The analyses discussed in the sources laid out these potential impacts impartially as risks stemming from those tariff policies without taking a political side, just reporting the potential business consequences.
Got it. So tariffs add this layer of macroeconomic and geopolitical risk on top of the already complex technical and market challenges IonQ is facing. All right, we've covered a lot of ground and reached the end of our deep dive into your source material on IonQ. Let's try to bring it all together now, synthesize what we've learned.
Okay, synthesizing. IonQ definitely emerges from these sources as a prominent and visible player in this incredibly high potential, but also incredibly high risk field of quantum computing and networking.
Right. Leader, but risky.
Exactly. They possess unique trapped ion technology, they have substantial IP portfolio, and they've made a point of making their systems widely accessible via all the major cloud platforms. That strategic expansion into quantum security through the IDQ acquisition looks based on the sources, like a pretty shrewd move.
Why shrewd?
Because it diversifies their offerings and directly addresses a tangible near-term market, need quantum-safe security with actual hardware sales, not just future computational promise.
Okay. But then there's the flip side, which is crystal clear from the financials.
Oh, yeah. They are not profitable, currently operating at significant net losses and burning through substantial amounts of cash to fund that ambitious R&D pipeline, those acquisitions, and their global expansion.
And the challenges don't stop there.
No. They face intense competition from giants and startups, using different technological approaches. There's the fundamental uncertainty around developing these breakthrough technologies. The timeline to widespread commercial adoption and true quantum advantage is still, frankly, largely unknown.
But they do have that cash pile.
Right. That significant cash balance is crucial. It provides them with a runway, potentially for several years, to execute this very capital-intensive strategy. But success ultimately hinges on so many things falling into place. Continuing to hit challenging technological milestones. Effectively integrating those acquisitions, which isn't easy. Successfully navigating a really competitive and rapidly evolving landscape, and, critically, achieving widespread commercial adoption and sustainable revenue growth before that cash runs out, or before their technology potentially gets leapfrogged by a competitor.
So that dual focus on computation and security, it offers multiple paths, but requires this constant balancing act.
Absolutely. Balancing aggressive investment in the future with the, harsh realities of a nascent market today.
Okay, and that brings us perfectly to the provocative thought we teased way back at the beginning. Here it is. Given the massive ongoing R&D spending, the big strategic acquisitions aimed at building future capability, the significant cash burn needed to fuel all of this, and that long, uncertain path to profitability in a rapidly evolving, highly competitive market, how should you, as an investor, truly weigh IonQ's undeniable long-term vision and potential against the very real, very near-term financial risks and their deep dependence on technological breakthroughs that, let's face it, are not guaranteed on any specific timeline? Can they successfully bridge that gap to widespread, profitable commercial adoption before needing significant further capital, or maybe before a competitor just comes along and leapfrogs them entirely?
That is the fundamental question, isn't it? For any company making such a huge long-term bet on revolutionary technology, you're essentially buying into a distant promise, a vision, underwritten entirely by today's balance sheet strengths and their ability to execute flawlessly against immense risk.
It's a lot to think about. What stands out most to you after going through all these sources on IonQ? It certainly paints a picture of high stakes. And remember to like and subscribe to the Stock Analytics AI YouTube channel for more deep dives based on your source materials. This report is for informational purposes only and does not constitute financial advice, investment advice, trading advice, or any other sort of advice, and you should not treat any of the report's content as such. The content is AI generated based on the provided research materials and should not be solely relied upon for making investment decisions. The information contained herein is based on research materials provided and available up to early June 2025. The stock market and the quantum computing industry are highly volatile and subject to rapid changes. Past performance is not indicative of future results. Readers should conduct their own comprehensive research and due diligence and consult with a qualified financial advisor before making any investment decisions. The authors and publishers of this report are not responsible for any investment decisions made based on this report. The discussion of tariffs and their potential impact is based on publicly available analyses and reports as of the specified period and is subject to change based on policy developments.